Hi, in this video I am going to explain journal. Journal is a book of primary entry or original entry. All transactions are initially recorded in the journal. Let me explain with an example. Just see the problem. Purchased goods for cash. When you purchase goods, what goes out? Cash goes out, goods comes in. So what is the entry for this transaction? For any entry, for any transaction, you need to have a thorough knowledge about debit and credit. Then only you can make entries in the journal book. So for the first transaction entry is purchase account data to cash. 1st January 2000. Purchase goods. Purchase account data to cash. How much? 10,000 rupees. Journal means you have to enter the transaction both debit side as well as credit side. So based on the golden rule, you know very well about the three rules, no? Real account, nominal account and personal account. According to the golden rule only, you can make entry in the debit side as well as credit side. While you purchase any item, any goods, whether it is a goods or stationery or any asset, whatever it is, when you purchase any item, that goods comes in. When you purchase, cash goes out. So cash is a real account, no? So what is the golden rule for a real account? Debit what comes in, credit what goes out. When you purchase something, cash goes out, no? So enter credit side. What comes in? Goods comes in the way of purchase. So debit purchase, credit cash. For each and every journal entry, you have to write narration. So narration should be start with being. Being purchased goods for cash. Narration is nothing but it is details about the transaction. Every journal entry is accompanied by a narration which explains the details of the transactions which the entry is written. So this is very essential. For each and every entry you need to write the transaction details, or it is called as a narration. So first entry is over. What is the second transaction? Purchase stationery for cash. Same thing. In the previous entry, they didn't mention anything. They mentioned just purchase goods. But in this end transaction, they clearly mentioned that purchase stationery. When you purchase stationery, what comes in? Stationery comes in. What goes out? Cash goes out. Okay, just write the entry. 2nd January 2000. Stationery account data to cash. How much? 500 rupees. Again you have to write narration. Being purchase stationery for cash. Then third entry. Purchase furniture for cash. Same thing. Here they mention furniture. They have purchased furniture for cash. So when you purchase furniture, what comes in? Furniture comes in. Cash goes out. On 3rd January 2000, furniture account data to cash account. How much? 2000 rupees. Then 4th transaction, sold goods for cash. That is, you have sold some items for cash. Sales can be in two bases. One is cash basis, another one is credit basis. If they mention any name without cash, it is considered as a credit sales. But here they didn't mention any name. They have clearly given that sold goods for cash. So it is a cash sales, that is based on cash. So write the entry. What is the entry for this? Cash account data to sales. Again you have to write narration. Being sold goods for cash. How much? 1 lakh rupees. On 4th January 2000. Next entry. sold goods to James. Just see the difference. The previous entry is sold goods for cash. They didn't mention name, so it is considered as a cash sales. But in this transaction, they have mentioned the name. They didn't mention about the cash. Sold goods to James. It means it is a credit sales. They have sold some items to James. So he is a debtor. Okay, your amount is there, so you are going to get amount from James. Till you receive amount from James, he is a debtor for the company. Sold goods to James. So what is the entry? Same thing only, but instead of cash, you have to write the customer name. That is, debtor name should be mentioned in the transaction. So sold goods to James. Entry is James account debtor to sales. Just compare with the previous transaction, previous entry, cash account debtor to sales, since it is a cash sales. But this is a credit sales, no. Instead of cash, you have to write the name of the customer. James account debtor to sales, 4,000 rupees. On 5th January 2000. Again, you have to write the narration. Being sold goods to James. Then, on 6th January 2000, paid rent. Rent, it's an expense, no? Any expense, it's a nominal account. What is the rule for nominal account? Debit all expenses and losses, credit all incomes and gains. So, when you pay rent, it is an expense. So, nominal account rule is debit all expense. So, enter this item under debit. Rent account debtor to cash. When you make any payment, what will happen? Cash goes out for rent. So rent is an expense. So debit expense, cash goes out, so credit cash. How much? 800 rupees. Then last entry. On 7th January 2000, paid salary of rupees 8,000. Same thing only, in the just like a previous transaction. There it is a rent, but here salary. So salary also, it's an expense for the business, for the concern. So any expense, it's a nominal account. What is the nominal account rule? Debit all expense. So write debit. Salary account debtor to cash. So when you pay salary to your employee, what goes out? Cash goes out. So cash is a real account. What is the rule for cash real account? Debit what comes in, credit what goes out. When you pay salary, cash goes out. So credit salary, 8,000 rupees. Ledger is the second important stage in the accounting cycle or accounting process. In this stage of accounting cycle, all recorded business transactions or entries are grouped on a predetermined basis. Such classifications or grouping takes the form of accounts in a separate books known as ledger. Let us see the previous problem. First entry is purchase account debtor to cash. So in order to group or make ledger, you need to prepare first book, that is purchase account, and second one cash account. So in order to enter purchase, you need to have purchase account as well as cash account. Next entry, stationery account debtor to cash. For that you need to have stationery account and cash account. Cash account already is there, no? Again you need not open. And come to the third transaction, furniture account debtor to cash. So already we didn't have any furniture account. So you need to open furniture account. And then cash already is there. Again you need not open. Then next entry, cash account debtor to sales. Cash is already there. Sales is a new book. Then next entry, James account debtor to sales. So you need to have a separate ledger for James. Sales already there. So need not open again. Then rent account debtor to cash, no. Rent you need to have a separate account. Cash already is there. Then last entry, salary. Cash is already there. So in order to make grouping or in order to prepare ledger, you need to have a 8 ledger books separately so that you can make entry in the ledger book. So it is a very, very important step. So the first step in accounting process is journal. Journal means recording all the transaction, whether it is a small transaction or big transaction, whatever may be the value, you need to technically write and record all the transactions